Thanks so much for tuning into this earnings conversation with Ms. Kiran Mazumdar Shaw of Biocon. They came out with a strong performance almost across, in fact, across all segments. Biosimilars in particular did really well, but if you just look at the broad brush growth numbers, they look very, very robust. The question really is that after such a strong exit to FY22, what is in store for FY23, and is it possible to predict? It's the question I ask to every industry captain. Is it even possible to predict how the year can be in light of the various uncertainties that we live in, more so right now over the course of the next couple of quarters? Ms. Shaw, great having you. I hope all is well.
Yeah, thanks a lot. And let me start by saying that, yes, we've had a very strong showing this quarter. All our businesses have delivered a very strong set of numbers. And to your question about whether we can sustain this number and improve on them, I certainly feel so, because I think we've had very muted performance in the first 2 quarters of last fiscal. And I think, we are beginning to not just see a normalization of operations, but there are some key contributors to this growth. So let me explain why. If you look at the generics business, obviously the first 2 quarters were hit by a lot of pandemic effects on logistics, raw material supplies, etc., which now have normalized. We've also seen a ramp up of demand in terms of our APIs. We've seen some new launches, especially everolimus in the US market. And going forward, the capacity expansion that we've done in Visakhapatnam is now going to cater to that additional demand in FY23, which will boost growth, followed by a few very key launches in FY23, which will also drive further growth in generics. So we're very confident that we will deliver double-digit growth, unlike the flat performance we had this fiscal. Now, coming to biosimilars, which is the most exciting growth story for us as a group, 48% year-on-year growth in FY22 in the Q4. And of course, we've seen an overall 24% year-on-year growth when it comes to the annualized earnings. This is in line with what we had indicated, because if you remember, the first 2 quarters of FY22 had a run rate of roughly $100 million a quarter. This now has basically broken away into $150 million per quarter growth since Q3 and Q4. Obviously, the contribution has come from insulin glargine, which received its first worldwide interchangeable label. And if you note from Viatris's comments, we are likely to see mid to high teens growth by the end of this calendar year. This augurs very well to set us up and move us from the $150 million a quarter to veering towards $200 million a quarter, just on our standalone biosimilar story, which itself is very exciting. Yes. But add to that, in the second half, the entire Viatris business and the Serum Institute business, and you will see a hugely expanding growth story, which really is going to set us up for that almost $2 billion revenue business by FY24. So it's a very exciting inflection point for us. But even if you were to set aside the Viatris and Serum Institute deal, the business is growing very robustly. Not just that, we've just announced 2 of our Wave 2 assets moving into the clinic. And we have also announced that we have exercised the option for aflibercept with Viatris. As you know, aflibercept is the first to file and hopefully will be the first to launch. So very exciting. Of course, adalimumab entry into the US is also being keenly watched, and we are well positioned to play in that space as well. So I think overall we have a very strong growth story moving into FY23.
Yeah, and sure, I reckon this is happening across segments, right? Because across markets, because in Q4 at least, developed markets, emerging markets both showed, for different reasons and different contributors, pretty strong growth.
Yes.
Okay. The quantum of growth and the breakaway from normalized patterns that you spoke about. So, moving from 100 to 150 it's a great 50% growth, and then you're adding on another 33% in pretty quick time as well. You reckon this new run rate that you're talking about, organic that is, as we speak, could happen as soon as sometime later this financial year itself?
As you said, there is organic growth and there is inorganic growth. The organic growth can certainly move into a very strong trajectory, like I mentioned, just based on insulin glargine. We haven't even factored two more products that we will add on to this portfolio for the US market, which is really aspart and bevacizumab. Both these have been inordinately delayed because of regulatory issues, not under our control, but on want of inspections, the pandemic effect, etc., etc. But I think that also is going to add to the growth story. And then, of course, you have your inorganic growth coming from Viatris and Serum Institute, which will further augment the size of the business.
Ms. Shaw, just some insight into the inorganic moves as well, because the analyst community gets bogged by these ratios that they focus on, which is that, it's a strategic fit, but it comes at a cost. Whereas I'm sure when you are doing this acquisition, you're thinking 2, 3, 4, 5 years out as well. Can you talk a bit about it using Viatris as an example, maybe? And how do you think that contributes not just in the current year, but going ahead as well?
So I think it's a fairly simplistic model. I don't think there's any complexity in that because, unlike any other M&A, which has a huge amount of complexity, this is really just bolting on a commercial engine to the already existing R&D and manufacturing engine that is working very well for us, right? So the integration and adoption of the commercial engine for us is not going to be as complex as for other companies. I think there is a lot of skepticism within the markets, which seem to indicate that, the price we are paying for this business is very high, but I don't agree with that. I think there are enough benchmarks to show that we have paid a very fair price for this market, for this business. And I think it allows us to seamlessly, assume an inorganic growth model, which most companies are not able to do. Today, any company that basically has to acquire any inorganic growth has to only acquire products that are still under development. And that is a very different story than what we are talking about. Here we are talking about a partnered program where we seamlessly get the benefits of that business, both at a top line and at a bottom line. And I think the second part of it is that we have been very, close partners. So understanding the transition of people and business to us is far less complex than for other companies. So I think I want to put that into perspective. The price we paid is very fair. The financial modeling that we have taken into account for this business is very attractive. And I think the way we are structuring the deal is also very, very optimal for the business. It's a part, from our point of view, it's part equity, part cash. For Viatris also, it is part cash, part equity. So I think overall, it's a win-win for both. So I just think it's a very attractive deal. I don't see why the markets are confused or reading differently into it. But I personally believe it's a no-brainer. It's a game changer. And it's extremely value accretive.
Could it be, Ms. Shaw, I'm asking you, that the quantum of benefits that come in from a deal like this get magnified with the combined experience and expertise of both organizations, and maybe not visible right now, but starts showing immense benefits maybe 2, 3, 4 quarters down the line?
Well, I've always been at the brunt of skepticism, and I've always proven them wrong. So I think this is a time for us where the numbers will speak for themselves. I think you will start seeing numbers being delivered. We have a very, very strong visibility of how this will happen. I think it's for the markets to see it. And that's what I would like to comment on, because there's no point in my trying to defend or explain. I think the markets will realize how important this deal has been for us and how effectively we have delivered on this opportunity.
Okay, call. Michelle, I think about 6 quarters ago or 8 quarters ago, you had told me about R&D spends and how you would want to be in a seat wherein you consistently increase that, because that could be the backbone of your company's future. I see that this quarter as well, I believe there has been a substantial increase. Tell us a bit about what areas are you looking forward to going ahead, and the R&D spends as well per se. The number I think is northwards of 70% for the quarter.
Yeah. So I think, like I've always said, our pipeline is our lifeline. And if we don't invest in R&D, there is no future. So I think people have to understand that if they want to see solid, strong, and sustainable growth, you have to be an R&D driven company. And that R&D, unlike what the market is used to for generics, is many orders of magnitude higher when it comes to biosimilars. But that is why we are now in a leadership position in biosimilars compared to our peers. So I think that's the way you have to look at it. There are many Indian companies vying to play in this place, but are they willing to make those big bets? Are they willing to invest big time in R&D? Remains to be seen. Of course, we have basically developed a lot of expertise in to ensure the probability of success of every one of our R&D programs. Now, when it comes to R&D spends, I think both generics and biosimilars are beginning to play big, and we want to play in the difficult to play segments in generics. And of course, biosimilars continues to be a very difficult segment for most companies to play in. For us, of course, it's a matter of experience and expertise that gives us the courage and appetite to invest more and more in deepening our pipeline. As we speak, we have the deepest biosimilar pipeline compared to any other company. We have 20 products under development. We have 7 of them in the market. So the widest and deepest pipeline compared to any other company. And we will continue to invest in R&D. I think the probability of success for our R&D programs is so high that we will take advantage of that expertise we have and continue to lead the way in terms of having more and more biosimilars coming to the market. I think we have an early mover advantage. We have certainly a very strong advantage when it comes to be fully integrated, because most companies are not fully integrated. And to be fully integrated, you have to keep investing in CapEx, both in manufacturing and R&D. So I think the complexity of this business needs to be evaluated. Secondly, we are the only company with this unique offering of biosimilar insulins and monoclonal antibodies. And if you can just pause for a moment and look at the insulins business, really we have a very strong position in insulins, because there's no other competitor that has a complete portfolio of biosimilar insulins, and that to interchangeable insulins. So I think overall we are very, very gung-ho about our portfolio, about our pipeline, and our ability to serve these markets very successfully.
Okay. Michelle, before we wrap this up, actually a two-part question. At the cost of repetition, would love to understand what kind of growth do you envisage, exceptional items notwithstanding, for FY23? And could there be any kickers to that because of the ongoing situation in continental Europe? Companies have given me divided opinions about the kind of opportunities that open up as a result of that conflict. Would love to understand from you as well.
Well, as you know, most of our overseas business has been focused on the US market.
Yes.
Europe, of course, is an important market for us, but I would say in that context, the emerging markets are a much bigger part of our business offering than Europe. So I don't think the geopolitics of our time is really affecting our business at this point in time. It's really the US and emerging markets that are really supporting our strong growth. Europe is something we are trying to develop because Europe itself is not a very attractive market for most companies. But I hope that it will end up being an important and interesting market, because Europe itself has to understand the importance of encouraging a viable marketplace for both generics and for biosimilars, which it is not at this point in time.
Okay.
Most companies are there because it's nice to be there, but it's not that they have to be there. But I think the moment companies realize that, Europe itself will become an important market.
Okay, and just at the cost of repetition, the growth estimates for FY23, exceptions notwithstanding.
Yeah, so I don't want to give a guidance, but all I want to say is that obviously each one of our businesses is poised for solid growth. We have given some guidance for our generics business, which is really a double-digit business. We certainly have guided for our biosimilars business to be at least a 30% growth in the coming year. But when you bolt on the inorganic growth, obviously it's going to far exceed that. And then as far as the research services business is concerned, they have also guided for a mid to high teens growth in FY23. So overall, I think you can see that we are tracking in a very high growth orientation.
And wish you all the best for that, Ms. Shaw. Thank you so much, and all the best for FY23.
Thank you.